Hey everybody, this is Jose Blasco. We are about to get started, and as always, I'd love to confirm sound is good. Please go ahead and send a quick message on the chat box with a quick hello or anything nice they would like to say to the group and the community, and that would basically confirm that you hear me, and then I know we're ready to get started. So please go ahead and do that when you have a moment. We are starting in 15 seconds. How are you, Mark? Good to see you. Good to see everyone. I'm positioning myself here in the bottom right of the corner as always. And here we go. We just hit the top of the hour. So it's time to get started. Let me switch to live. Welcome everybody. How are you, Mark? How are you, Christian? Everyone else, it's good to see you guys. Today it's June 17, 2021. This is options with options, and as always, you know, the plan is to trade options. It's very simple. On the other hand, the beauty of options is that, as I always say, they give you options. So we love to look at the various market conditions and adapt to those conditions to put ourselves in the most likely profitable positions as possible by being well adapted thanks to the beauty of options trading. So that's the plan for today. And before we get started, as always, I just kind of lost my cursor. Here we go. So I would like to highlight the disclaimer on the upper left side of the screen so you can read it carefully. Please do indeed read it carefully because this is important information. And that way you are well informed, you know, with the disclaimer. Yes, Mark, Christian as well. I did receive your emails. It's been a little bit of a busy day on my end, so I didn't have the chance to get back to you guys, but rest assured that I will get back to you, okay? No worries about that, and I appreciate very much those emails, everyone. Ahmed, how are you, my friend? Good to see you. Agenda for today, as always, we just said hello. We are simulcasting. Some of you know this by heart, isn't it? So again, be aware that different platforms such as YouTube, Facebook, our private room in our website, tradewithufos.com/live, each of those streaming platforms have different video lags and video delays. So keep that in mind when it comes to attending the sessions and comparing what you see on your screen and what you see in my screen. We may have 10 seconds delays, 15 seconds difference. It depends on where you are and the platform you use. How are you, Joanne? Good to see you. So keep that in mind, as well as simulcasting. The process that we use normally is very simple. We run, let's call it half of the session in the public streams, and we run the full duration session in the private room. The public streams are free by definition, so you can just attend there. And if your approach to trading is, let's say, a simplistic approach, and you take it seriously, but you are just looking at trading as a part-time thing, so then probably YouTube, Facebook, it's good enough, and then you don't need to subscribe to anything. Just watch it there. If you are looking at trading like something a bit more serious, you are like me, you never got enough, you always want more, you love it, love it, love it, so then I certainly recommend you to be a subscribed coaching plan member on our website, and you can find more information there, okay? So we're gonna look at the market, look at the trades that we have, even though today trade management will be very limited in time, and then from there we'll jump into planning new trades and putting them in the account, meaning executing those trades, okay? So be ready to work with me, be ready to be engaged, be ready to be interactive. I'll have questions for you, give me answers. You'll have questions for me, I'll give you answers. Let's work together. This is teamwork, everybody, okay? Wonderful, perfect. Can see everybody's ready. On YouTube, you guys are always just a bit shy, so just say hello, okay? Just to make sure that all is good there and you hear me well. Please go ahead and just comment on anything you'd like, okay? Good. So what's going on with the market? Well, we had a change of climate, okay? We were expecting it for a while, and we can see we have a red dot, okay? And, people can go ahead out there and say, well, of course, it was the Fed announcement yesterday. Whatever it is, to be honest, to me as a trader, it doesn't matter. It's interesting, but it doesn't matter what is it that does things. What matters is that, based on statistics, that was supposed to happen. It was actually overdue, right? It was time for this to happen. So now we are in that new climate, okay? Candle 1, out of what statistics suggest 2. In other words, we may have the market fall 1 or 2 days, hit those green UFOs, and starts going back up again and starts making all-time high one more time. Okay, so again, in today's session, I would certainly like to take advantage of, maybe not so much anymore, but definitely yesterday when you look at the VIX and everybody got scared with the announcement, volatility went higher all the way to kind of like 19s. Okay, today volatility is down to 17, so it's been dropping like 5% in the day. So we have less volatility that was available right at the beginning of the trading session or overnight. But still, you know, probably a good idea to start looking at building some iron condor so we can be selling options and collect negative vega in our portfolio. So we'll start with doing that, and from there we will move into directional opportunities. I would like to try to position myself again the same way I did when we put ourselves in the Lily trade to take advantage of a potential push through all-time high like we've done before. Okay, so that's the idea. Mark, you said we had to do something with one of our trades next Monday. Could you repeat what that was? Yes, I'm gonna go over that right now, Mark. Love it. Perfect. Fermon, I can see you are there. Paul, no worries, my friend. You know, late is better than never, isn't it? So this is a kind of like a very common saying in my language, on my mother tongue, Spanish. So good to see you, my friend. And of course, I know that many of you actually are watching this recorded because you don't have, it's not possible for you to be able to be here live. Okay, so big hug and big hello to everyone, no matter if you are live with me right now or you're watching this afterwards. Okay, Leland, how are you? Good to see you. So anyway, so we're gonna be looking at iron condors in a minute, but first let's have a quick review of what we have in the account. First of all, MasterCard. Let me load OptionStation Pro. We're gonna fly through this, okay? So MasterCard, it's an easy one. It is an iron condor. You can see it's all using June 18 expiration. That, my friends, is tomorrow. This trade is currently making $75 of profit. The options that we sold are trading at 3 and 3.5 cents, 3 and 2.5 cents. So if you wanted to close the iron condor, you could certainly do. At the same time, you may find difficulty with liquidity with 1 day to go, given the fact that the current price 362.15 is very far away from 395 and 320, which are the strikes we sold. So with that in mind, and looking at the probabilities for MasterCard. Okay, did I do this right? So it's loading. Let me do it again. So MasterCard. Here we go. So with that in mind and the probabilities, let's take a look at the probabilities and the statistical range for MasterCard. Okay. Come on, Mr. Option Chain. We need you. We need your data. Without your data, you know, we cannot do much. So please load. Okay, so still loading. Not sure if I upset OptionStation Pro because I typed the symbol twice very fast. Okay, that sometimes happen. I had a few issues in the past. I remember, Christian, when you suggested. Okay, I got a timeout. Okay, so let's do it again. MA MasterCard. I remember, Christian, there was a time where you suggested me to use the global listener symbol mode for MasterCard to, you know, for OptionStation Pro, just to save time on loading stuff. And I remember telling you that there was a moment in time in the past where I got a lot of freezes of the OptionStation Pro when using that function. Funnily enough, today I'm having that type of freeze when typing the symbol manually. Okay, so it's kind of like a little bit of an interesting sense of humor. So let me close it. I'm just gonna try to reopen it. I may have to restart TradeStation. Let's see if it works. Okay. To be honest, normally OptionStation Pro it's got quite stable throughout the time compared to what it was when they launched it. Okay, so we should be okay. But that was certainly a weird behavior what we just saw. Okay, so I'm restarting it and let's see if it goes smooth, because we have a lot to do. So we certainly need technology on our side. Okay, so SPY just loaded normally, so let's go for MasterCard now. And now it's loading well. Okay, yeah, so I just basically kind of upset TradeStation by typing the symbols too fast. That's what it was. Anyway, so probability wise, statistics suggest that that stock is going to stay between 368 and 355. So if we look at what is that on the chart, so 368 is here, 355 is here. So indeed, it looks very, very, very likely that we're going to end up, you know, below 395 and above 320. Okay, so my approach to this trade would be do nothing, just let it expire, save yourself the commission, and that's it. Okay, so that would be the my approach to this trade. Okay. Yeah, I see your smiley face there, Christian. Yeah, funny one, isn't it? Anyway, Murphy's Law maybe. So the next one in line is Starbucks. So when looking at Starbucks, again, Starbucks is another iron condor that we have in the account. That one is using the next expiration date, which is the week after, June 25. It is currently accumulated, thanks to time decay, $9 of profit. It's not too much, but you know, it's doing its thing. So let's take a look at what statistics suggest when it comes to Starbucks. Okay, and what statistics, well, actually, we are in the middle of the race right now. So let's take a look at what statistics suggest. Sorry guys, I'm driving you crazy switching back and forth from one application to the other one. So here is Starbucks being loaded, and it shows 114.5 to 108.5. Let's say that's accurate enough. So 108.5 is more or less here, something like that. And the other one I said was 114.5, which is more or less here. So again, Starbucks is the same story. So far, it does look like very well positioned to end up in the purple area from now until expiration. Top of that, we have an extra peace of mind, which is we have 2 UFOs above, 2 UFOs below. So if price was to try to move away, probably those UFOs would bring it back down or back up, depending, you know, with the direction of the movement, allowing for the stock to trade longer inside the purple area, which is our goal. So far, all looking good with Starbucks and MasterCard, nothing to be said. Now, PayPal. So what's going on with PayPal? Well, PayPal was one stock yesterday that we saw that was trading way above, okay, way above the strike we sold. We sold at 260, okay, and that stock was already trading yesterday around 270 something or 270 something like that. Today, funnily enough, PayPal is 2.6% up, while yesterday many stocks were dropping and the market was a bit skeptical today. So PayPal is looking like it's going to the moon. A new green UFO just showed up. So certainly that is you know, showing a lot of strength in that direction. Okay. Now, with all of this said, you know, look at the stats. 19 out of 7. Okay. So that stock is definitely you know, ready for some sort of a correction and come back down. Okay, so what to do with that stock? Well, not much. Okay, why? Because yesterday, if you look at PayPal, we had yesterday we had the 16 July expiration call and put, okay, which are the 230 strike for the put and 260 strike for the call, and we had June 18 expiration for both the call and the put. What we did yesterday was to roll. Okay, we rolled the call, okay, from June 18 to June 25. We did that yesterday, so I'm not gonna go back to this. And you know, that helped us to collect, I think it was about $90 of premium, additional premium or whatever, and we collected that, and now we're gonna play the game until into next week. Okay, what we were not able to do, okay, was to roll the 230 put yesterday for any significant decent premium. And the reason was that it was so far out of the money that there were distorted Greeks no matter the expiration date that you pick. And in all of the cases, the amount of premium we'd collect was not really justifying the commissions to be paid, okay, to do the roll. So what we said is forget about it, okay? Whatever you collected, that was $28 that we collected. So instead of rolling it for 10 cents and pay commissions, which basically leaves you with nothing, so we're gonna leave it alone. So the option okay, that 230 put that expires on Friday will expire tomorrow, and then, and this is your answer mark, okay, with the first stock, because we need to talk about AMD as well, which is the same story. So what we're gonna do is let the 230 put that expires in June 18 expire tomorrow. Let it expire. That's it. Okay. And as it expires, so then we're gonna go ahead and on Monday when the market reopen, because you cannot do it on Friday or Saturday or Sunday. So then on Monday when the market is reopen, you will now sell the June 25 230 put at whatever price is trading. Okay. So I'm gonna place the order. So you see how this can be automated, okay? And by the way, as I place the order, I would like to add one extra comment here. Yesterday we saw the difference in fields depending on which platform you use, and some of you, I can tell, have a little bit of a perfectionist approach to trading, like myself. Even though I keep consistently for years, and I guess I will do it for the rest of my life because it's my genes. I tend to be a perfectionist, and as a trader, I know it's not good. So I tend to try to simplify whatever I do as a trader, when I review my trades, when I do whatever. So some of you yesterday, you saw that some of the TradeStation traders in the group got better prices than the TOS, the Think or Swim traders in the group. And some of you were wondering, should I switch to TradeStation? And the answer is no. Okay, because again, we're talking about 1 cent difference, 2 cent difference, and sometimes you will even get the same prices. TOS is a fantastic broker, okay? So no doubt about that. But again, all brokers have, interest and agreements with exchanges, and depending on the stock you trade, so sometimes some brokers will give you just a little bit of a better feel, okay? In my experience and my observation, I think that TradeStation is probably one of the most neutral brokers. But at the same time, let's face it, the user interface of TOS to execute options trades is probably the most complete and the simplest in the whole industry. Putting on the side preferences, I'm just being kind of like objective, just like I would say that interactive brokers, it's a complete pain to execute, even though it's amazing the things you can do with the platforms when you learn it, but you need to spend years to learn it because it's so complex. So it's really a pain. Well, again, everybody got pros and cons. Okay, so I would say that you guys don't need to do anything dramatic when it comes to the brokers that you use. TOS is certainly a fantastic broker, and I would say there is no need to change. I personally use all those brokers, okay, because I got multiple accounts, so I use different brokers. But yeah, so again, don't overthink about what we saw yesterday. It's a nice thing to know. It's a great curiosity. But it's not a guarantee that every time you'll get better feels with TradeStation, okay? So just keep that in mind. Okay, so anyway, so how do we place the order, okay? So if I was to, I'm just gonna select create a closing order, okay? I don't want to create a closing order, but it's just to get the symbol on the trade tab, okay? So what I'm gonna do with that is, first of all, we don't wanna buy, okay? We want to sell. Okay, and it's not June 18, it's going to be June 25. Okay, notice this option is currently trading for 14 cents. Okay, very good. Thanks for that, Mark. So notice that this option is currently trading for 14 cents. It's really very tiny amount of money. It's really very, very minor, but it's what it is. So what we're going to do is, and by the way, we don't know how much it's going to be on Monday. It may be more or less, depending if the stock goes up or goes down. Okay, I will not be surprised to see that stock go down tomorrow heavily, because it's been going up the whole week non-stop. So it's probably going to be a very good time for the PayPal traders on Friday before the weekend to collect a decent amount of profits. And if you were to see that stock fall on Friday, then you will remember what I said. I'm not trying to predict the future, okay? It's not my job. I'm just a trader. But again, I've seen it often enough that when stocks are very strong during the weekdays, typically Friday is a take profit day, okay? So that's good for us in the sense that this put is currently trading at 14 cents. It's so low, it's almost not worth it. Again, is what it is. We cannot change that, so let it be. If on Friday the market falls, now the put will gain value, because when the markets fall, puts gain value. On top of that, people will get probably a bit more excited or fearful, and therefore implied volatility will increase the value of that option a bit more. So I don't know, maybe on Monday we get 20 cents. I don't know how much we're gonna get, but I want to have an order ready for Monday for this trade to execute automatically. Okay, so notice I'm switching this to good till cancel. I'm gonna use a market order because I don't know the price that is gonna be available on Monday. But of course, I cannot send the order like that now, because if I send the order like that now, I'm going to get filled now. So what I need to do is I need to use a condition. Okay, I need to use a price condition, a timing condition, which is to submit this trade on Monday 21st. Okay, and because options don't have the best liquidity right at the market open, so I want to make sure that, you know, at least I give myself, let's say, you know, 3 minutes or something like that. So let's make it 9:33, you know, whatever. Yeah, I'm just being creative with the numbers now, okay? So 9:33, something like that. So that way, it's not like you're gonna get filled right at the open where you may be lacking liquidity. So let the market to kind of warm up with a little bit of, you know, those initial bids and bid and ask prices to be hit. So the bid spread stabilizes a bit. And then from there, now let's get your sell market at good till cancel get filled on that date, okay? So I'm just gonna leave my order in, okay? Oh, yes, of course, I cannot confirm and send. I was about to make a mistake. That's the consequence of using multiple platforms. You cannot have a market order with good till cancel with Thinkorswim. Okay, with other platforms, yes, but not with Thinkorswim. So I'm going to have to make this to be a day order, okay? Which again, it will not become a day order until it's triggered on Monday. So that's fine. And now notice how the confirm and send button is not gray out. And now I can place my order, okay? So I'm going to confirm and send. And now here under PayPal, I have a waiting order, okay, which has, okay, a waiting condition there. And therefore will not be triggered until Monday. So again, let the put expire, the one that expires on Friday, and sell a new one on Monday. So that way, at least you save yourself a little bit of the bid spread on closing the trade, plus the commissions for 2 units. You will only pay the commission for 1 unit and only for the entry, not for the exit. Okay, so that will improve a little bit, you know what we have. I will go ahead and, you know, add an estimation. Okay, so I'm going to duplicate the trade just for you to see what's going to happen. So if on Monday, oh, wait a minute, this is not PayPal. It didn't load PayPal. Okay, so let me reload PayPal here. Not sure why it didn't load PayPal, because we were looking at PayPal. Okay, so we're just gonna wait patiently until PayPal is loaded. I just want to update the simulation so you see how it's gonna look like. So then when you get your fill, you can then go back and also reconfirm for yourself that what you have is right. Okay, so I'm gonna duplicate the trade that we currently have. I will uncheck it. And notice that the only thing is gonna change on Monday is that 18th of June will become 25 of June. That's the only difference. And therefore that 414, okay, let's say I get filled at 14 cents. So that would then become $4. Okay, so I just get a little bit of a tiny extra premium. But now notice what happens to the risk profile. Okay, notice the difference. So if I show you the one that you will have on Monday, okay, so you have those little peaks, okay, the couple of little peaks, where if I show you the one that we currently have, there is only one peak, okay, because that one is still looking and accounting for the June 18 expiration instead of the June 25. So you will move from that risk profile to that risk profile the moment you evolve this trade on the Monday, okay? So anyway, so we'll review that next week on Wednesday when we are back together. And the last one here to comment is AMD. So AMD has 2 options, okay, that expires on June 17. Okay, those options paid 30 and 38 cents, which was okay. They are currently trading at, you know, pretty low values at this moment in time, and there is not much to do really. So when we look at AMD on the chart, so actually there may be something to do with the 85 call, because this stock has been rallying very hard, 4%. I didn't notice that before the session started. So because the stock has rallied so hard towards the 85 call, we may have an opportunity to create a roll now, right now. So let's take a look. AMD. Okay, so this is AMD, very good. Great. So the 85 call has a theta of 24 cents and an extrinsic value of 24 cents, okay? And again, we got 1 day and a half to go, so 1 day and a half to go times 24 is more than 24, so those are distorted Greeks. How much I get paid if I roll it to the next one, which is the 85 that expires in June 2025. So notice I got 1.01, okay? So actually that's a great opportunity to do a roll. So let's go ahead and take a look. Nice that the market did rally on that 85 call. So we're gonna create a rolling order from 85 to 85. Okay, so 85 call June 18 is being closed. 85 call June 25 is being sold. The net credit to be collected would be $70, 70. And if we were to do that, so what happens to our trade? Well, let me simulate so you will understand. So I'm going to duplicate, analyze duplicated trade. So I'm gonna uncheck, and basically what's happening is that the 18th of June becomes 25 of June, and basically what's happening is that my debit of 162 is now diminished by 70 cents, which is what I'm gonna get from the roll, and therefore I am now left with a trade where the most I can lose is $92, right? $92, which is the difference between 162 and 70 cents, okay? So what would be the P&L now? So you would be in a positive P&L of $59 per contract, and now the worst case, okay, it's to lose $92. That's the worst case scenario for this trade, where the best case scenario for this trade is right there, which is about $200, okay? So this would be the situation for the trade, and therefore rolling is now allowed. That was not likely going to happen, but guess what? It did happen, and that's because we just had a 4% move on the stock in the direction of the 85 call. So we are going to roll it, okay? Not only because it provides the advantage we always look for, but because if you don't and the stock keeps going higher, you will find yourself assigned short stock on Saturday, right? If you are above 85 on the closing price on Friday, okay? And remember, there is not a big deal of being assigned stock because you have a long call against the short stock, so it's fine. But at the same time, it's better to roll because we got the distorted Greeks, and then you can also avoid that margin impact by being assigned shares of stock. So long story short, I'm going for it. I'm gonna ask, let's say 65, trying to get the fill quickly. You guys negotiate the trade well. I got 79 actually, so I got filled at 79. So that's a better price than expected. So let me do the math again. So if I look at my initial 162 and now I got paid 79, so that means that my new price is $83. This is the current price for the trade, and this is the trade, the net result of the trade I have in the account, including the roll we have just performed. Again, one more time, okay, because this is counterintuitive until you really get it. Remember, the reason why we're doing this trade is to make a profit out of the increase of volatility. So if we type 5% increase volatility, what happened? Your $50, $60 become 105. Okay, so again, notice how this trade is going to be very nicely reactive to volatility rising, okay, which is what we're doing. Okay, and now, worst case, the most you can lose is $83. Fill that 81 with Schwab. Nice one, Christian. Very good prices. Okay. Also, based on your email, Christian, it seems that you are getting very good feels with the Schwab platform. I never use that one, so I cannot comment on that, but it's very nice of you to share that. Anyway, so we have that there, and then the last one, we could comment on is Lily, but really there is nothing to comment because the stock is doing its thing, and unless it just starts even dropping seriously or rallying seriously, there will not be much to do because we already agreed that this trade with Lily is a trade where we are we are happy and waiting to either make 200 plus or 1,200 plus. Okay, so that's the thing. So we are trading, 0.4% above yesterday price, and again we have the stock now in that congestion mode. Probably going to change climate from blue to red for a few days and then go back up. Okay, so we'll be ready to take advantage of that. Cool. Wow, the review took me a bit longer than what I expected because in the end we had to do rolls. Oh, wait, by the way, I almost forgot. With AMD, okay, with the 70 put that we didn't roll, okay, we need to do the same thing. Okay, we need to do the same thing that we did with PayPal. So the 70 put that expired on Friday, okay, we're gonna let it expire and we're gonna sell a 25 June 70 put, okay, which currently are trading at 3 cents, okay, so that's absolutely terrible, okay, absolutely terrible. So what we're gonna do here, because the price here is so low, I'm just gonna approach it slightly different. So I'm gonna do the same thing. I'm gonna say it's a day order. This trade will be submitted only on Monday 21st, only after 9:33. And so that would be the same, but before, notice that I had a market order, right? Well, now because this trade is so cheap, okay, so what I'm going to do is instead of a market order, I'm going to have a limit order, and I'm going to say that at least, you know, I need at least, you know, let's say 10 cents. If I'm not going to get 10 cents, I don't even want to sell it. So I'm going to go with a limit order. Remember, the meaning of limit, okay, is that price or better. Okay, that price or better. So what that means is that you know, if the price of that option is trading at, let's say, 23 cents at the time of the trade, I'll get 23. If the price of this trade is 9 cents, then I won't get filled until it's 10 or more. Okay, so that way, you know, at least I don't get filled for 2 cents, and then I have to pay commissions, and then 2 cents become, you know, nothing, right? So so I'm going to save it this way. I'm going to confirm and send, save, okay, and I got my trade ready waiting here for Monday on AMD, okay? And that would be it with trade reviews, and now looking forward to find a few trades, okay? Mark, you got 83 with Thinkorswim. Very nice one. Again, this is very relevant that you guys are sharing all those values, because first, it kind of reveals what brokers are capable of doing, but second, for the ones of you that didn't place the trade yet, now you have a reference, right? And now, in order to negotiate the spreads, it's teamwork. We are basically helping each other to try to shave that spread the most efficiently as possible, okay? So thanks for that teamwork, everyone. Anyway, so let's find a trade. So I'm going to be looking for Iron Condors. We got MasterCard, but we already got one. So I'm going to start with FedEx. So let's see what we got available with FedEx. So many UFOs above and below. Earnings on 6/24, unfortunately. 6/24 is next Thursday. We cannot, okay? So because we're going to be using 6/25, so we need earnings to be after 6/25. So we cannot do FedEx. What about American Express? So American Express is showing 45%. Well, it's still loading. Earnings on 7/23, so that's good. Is that stock making all-time high? Yes, it is. So it seems that we won't find 2 red UFOs above, okay? And if that's the case, then we cannot do a trade. So 45% is not good enough, and pre and post market is 31, so it's not good, okay? So what about Nike? What about Nike? So we got 47% earnings on the 24th of June, so that's not good. What about TSM? Okay, so earnings on 7/15, that's good. Pre and post market give us 47%, that's not good enough. What about regular session data? That is worse, 41%, so no good. What about BHP? So BHP is 41%. What about pre and post market? 33, no good. What about Schwab? You have 51.69% on Nike, Mark. that probably means that you are loading a different quantity of candles than me, or maybe there is some setting somewhere. We need to explore that, Mark, that gives you different results than me, okay, which is what you mentioned yesterday. So 40% with pre and post market for Schwab, that is not good. Regular session is providing 52%, that is good. We only see one red UFO though, and it's making all times high, so we need at least 2 red UFOs. So GILD, patience pay, remember, patience pay. I want the trade now and I want it now, but patience pay. So we need to take it easy and spend whatever amount of time is needed to find quality, okay? So 729 is earnings. Where is that stock when it comes to the all-time high situation? Yeah, we got plenty of data above, so I believe we should be able to put together a trade with Gilead Sciences. We have 56%. If we look at pre-post market, we have 47. That's not good, but regular session is indeed good. And I guess if I load more data, I should be able to uncover more red UFOs above. I may need to go all the way to, let's say, February 2020. Okay, February 2020. So February 2020 is right there. Yes, and indeed, we can see that we got multiple UFOs above. Okay, so setup, it's beautiful with great probability, with earnings until 729. So the question is, how do options look like? Because this is looking very good, right? And when things look so very good, I'm always a bit in the skeptical side, kind of like maybe too good to be true. So let's take it easy. Let's not get overexcited. We always follow the steps. We never break the rules. We never rush it, and so far we can see proper liquidity in that expiration date. So let's go ahead and right click to analyze and sell an iron condor, okay, just to measure probabilities and statistical range, which is 69 to 65. So let's find out where is that on the chart. 69 to 65. So 65 is more or less here. 69 is more or less there. Okay, so that's the statistical range if we use next week. So if I go 2 UFOs above is here, right? So if I take that price distance from current price to that upper UFO, so we are talking about that vertical distance. If I project this below, we are talking about this vertical distance. So to be a bit more precise, what I would like to do is to attach it to here, okay, which would basically bring my line to be somewhere there. Okay, so if I go there, you know, I'm very, very beautifully well centered. Now the range is very wide, so I don't think I'm gonna get paid enough with a 73 strike with that expiration date. Okay, but there are more. So 73 is paying 6 cents. So it's not enough, as we expected. So what about the next expiration date, which is July 2nd? 73 paying 7 cents, not enough. What about the next expiration date? July 9, 73 paying 12 cents, not enough. What about the next expiration date? July 16, and wait a minute, won't wear the earnings? July 29, okay, so that's good. So 73, actually we got 72 and a half. This is paying 20 cents, so it's getting better, but not enough yet. And the last one I can try, because the next one is the earnings one, is 73, and that pays 29. So 29 is not ideal, okay, and I can see lack of liquidity here. Oh, wow, major lack of liquidity, okay. Okay, so guys, unfortunately, and I don't mean to be negative as a person at all, but you know, sometimes when it's too good to be true, it ends up being too good to be true. The range is beautiful and probably you know, wide enough for a very high probability trade, but there is no liquidity to do a proper one. Okay, so we're gonna move to Verizon. Your percentage is the same with Gilead. That's very interesting. Anyway, so with Verizon, you know what? If you don't mind, I'm gonna skip it. I talked about before about utility companies, and it's always worth it to check, but it takes time, and I want to get a trade, guys, so we can practice it together and get into the weekend. So you have your trade. We didn't get any trade yesterday, and I want to trade. Okay, so that way we can work together on that. So that stock would be making all times high if we surpass May 19. Okay, so I want to load data all the way to May 19. Here we go. So loading data. So PD. Earnings are August 11. So I got plenty of dates available for Cisco. I will need that because, oh wow. Those UFOs are so far apart. Yeah, hopefully. I mean, we got the red UFOs, I would say it's okay, but the green UFOs are way too far apart. Let me see, and crossing fingers, pre and post market will give good probability and nearer UFOs, because if that's not the case, oh yes, we got it. So we got nearer UFOs and we got good probabilities, so that's gonna help us to put the trade together. Okay, so let's go ahead and take a look at Cisco. So here is Cisco. Let's go for the beginning process. So nearest expiration date, analyze and sell an iron condor, plus 1 standard deviation minus 1 standard deviation. That's 55 and 52. So 55 and 52 is about here, and here, more or less. Okay, so what do we need? We need at least 2 UFOs above and below. So this is 1 and 2. So this would be UFO number 3, which is beyond. And if I was to take that measurement from here all the way to here, okay, this is the current price. Since I have shrunk the chart, I prefer to use another horizontal line. Okay, so if I was to do that, this brings me here, and to be honest, it's pretty well centered, and I got 2 UFOs below and 3 UFOs above, which is meeting you know, our rules. So that's looking good. Okay, looking good for a trade with Cisco. Now the question is how much we get paid for the 57 calls, which again, using the next expiration date is probably not enough, but we can use many, isn't it? So 57 pays 2 cents. Okay, we were expecting that. So what if I move all the way to July 16, the 50, wait a minute, what did I say? 57. So 57, it's paying 7 cents. Wow, that's very, very little premium. Oh wow, yes, I didn't see that. Look at that, 16, 16, 16. That one got 19, so hopefully that one got a bit more volatility. That's very low numbers. 57, 13 cents. I mean, yeah, it's just too little premium. How can that be? You know, I guess the VIX is being crushed, because with the, you know, I was expected more premium today, and I'm sure there was at the beginning of the day, with the, you know, with the panic in the market yesterday, you know, with the Fed announcement. Lots of these options gain plenty of value, and with the scan today, I was expecting an easier time finding an iron condor. Okay, but anyway, so we're gonna look at Walmart with earnings on July 1st. That means that we need to use June 25. Okay, so with Walmart, it has to be June 25. We got multiple red UFOs above. That's great. If we look at the regular session, we also have multiple UFOs below, and all is above 48% probability, so that's good. June 25, again, remember in this one, I can only use one. So hopefully we'll have premium enough this time. Plus 1 standard deviation minus 1 standard deviation. So this is 50.5 and 55. So 50.5 is kind of here. Actually, it's kind of here. That's 50.5. And 55 is It's kind of here. So we got multiple UFOs above, we got only one below. If we switch to, let me do the drawing. So this is the one UFO here. If I switch to pre and post market, great, perfect. So we have that UFO right there, which is beyond the dotted line. So we have multiple UFOs above, and we have this UFO is UFO number 1 in the pre-market session, and this UFO is UFO number 2 in the regular session chart. Okay, so they are both okay, and therefore we are talking about 50 point something and 55 point something. So let's take a look at how much we get paid for the 55 or 55 and a half, and it's not enough. 15 cents, not enough. So yeah, very disappointed with the current level of premium. Just evaporated. You know, I was expecting so much more, guys. I really thought we would have an easier time putting together this trade. So we didn't. So anyway, so what I'm going to do is go back to our directional scan. I am looking for directional trades. I'm looking at bottom, meaning cheap options. Okay, and what we're going to do is to analyze trades that potentially are going to enjoy that breakout when the market starts making all-time high, which is something I have explained multiple times. And therefore I want to start looking at Carvana, which is a stock which is currently in status number 4 out of 7. So based on climate, certainly it makes sense for us to think of being a buyer. Our reference price to be a buyer is 276.20, which is somewhere in here, which is indeed between those UFOs. So we do have an entry. That UFO has the upper part of it. It's 276.21, which is almost perfect compared to this, and probably is 50% or more. Okay, so 276.21 qualifies as a valid entry. Okay, you see, sometimes you spend plenty of time looking for a trade and it's not happening, and sometimes the first chart you load, here's the trade. So again, patience, my friends, is one of the most important virtues for traders. That, together with discipline and management of the emotions, which is all related. So 276.21. I just also want to check pre and post market out of curiosity. Okay, so that's 36%, so that's not relevant. But you know, with regular session, we do have more than 50%, so we are good. Okay, so we are looking for the S&P to push down a bit to get that stock to fall, hit our entry point, and from there starts going higher. And as the S&P makes all-time high, get a push like that. Okay, that's what we're looking for. It's not always going to happen, but it's a smart thing to do to position ourselves to take advantage of this if it was to happen, which is not so uncommon, isn't it, as you saw. So so let's begin with looking at the daily time frame to see where the targets will be. So if we were to do this trade, our target will be located right here, okay, which is 310.99. So that will be the target for this trade, 310.99. So let's input that. Okay, so 310.99. Okay, and the entry would be, we said, 276.21. Okay, so that would be the entry. Earnings for the stock are on August 4, and if you do the math from 310.99 to 276.21, which is the distance from entry to target, so we are talking about $35. So we need to pick an expiration date that allow us to make at least that $36 and $35, and that would be July 16. Okay, that's the one that allow us to catch that size of a move. Okay, now having said that, we also want to align ourselves with earnings, because as earnings approach, you have this increase in the premiums, as you guys know, which offsets some of the theta pain, and therefore August something, August 4. So the nearest we have is August 20, which happens to be a weekly expiration date where we probably end up enjoying a little bit of a better liquidity compared to looking at the 30th of July. Yes, where you can see the liquidity here is $3 apart, where here the liquidity is like 80 cents apart. Okay, so yeah, so we're gonna use August 20 for the trade, and this is a bullish trade, and we're gonna evaluate different scenarios. So scenario number one is to just go ahead and buy a call. That is scenario number one that we will explore. Scenario number two, we will analyze a buy a vertical spread, okay, a bull call spread. And scenario number three, we will analyze and buy a diagonal spread, okay, which is like a vertical spread with two different expiration dates. Okay, so we're gonna be looking at that, and notice that I am unchecking, you know, all of those values, and I will start with the simple long call. So if we do the simple long call, and let me compress all of this so it's not confusing. So if we do the single long call, what are we trying to accomplish? Well, remember, the goal is to start with a delta of 30, around 40 at the entry. Okay, I cannot wait to show you more stuff to pick, you know, very intelligent strikes, but for that I need, you know, more software than TradeStation. So I will show you stuff that, you know, you will appreciate very much. But right now we are just focusing on the delta. Okay, so delta 52. Okay, it's okay, but it's just too much. We, again, in order to optimize, you know, some of the way options pricing works, you know, we want to start with around 30. So what I'm going to do, I'm going to move to the 290 call. That drops the delta to 45. I'm going to move to 300 call. That drops my delta to 39. I am open to look at the 3 of 310. Okay, that makes my delta to be 34. But there is something I really dislike of this one, and I would like to ask you that question. What is it that you think I dislike, and I would not be open to select the 310 strike? What is it that I dislike? Okay, and I'm gonna come back and I'll give you the answer in a minute, but I would love you guys to type it in the chat box. While I'm waiting for your answers, I will disable that one and start working on the vertical. Okay. Now, for me to work on the vertical, again, I have the same goal. Let me check market. I want to end up with a delta around 30, okay? But also, okay, I want to make positive gamma for the entry, of course, but also for the target. So what happens? Let's say, for example, I do 310, okay, and 280. Or 310 and 260. Okay, so if I do 310 and 260, okay, notice what happens. I get a delta which is about 30, but then when it comes to my target, what happens? I get negative gamma. Okay, I get negative gamma, and I don't like that. Okay, why? Because, I mean, it's not like it's a problem, but notice that then when you get to your target, you have lost performance. You went from 31 delta to 28. So the more the stock moves your way, the more money you make, but the pace at which you profit is decreasing. Okay, so I don't like that. Okay, so I would like, it's not always achievable, but I would like gamma to be positive all the time. So how can I do that? Well, I need, you know, which is the unit that is hurting the gamma. Okay, well, take a look. If I take the one I buy, which is a 260, and I push it down, okay, everything becomes more negative gamma. Okay, so you would think that if I move the unit I'm gonna buy to 300, which is the nearest to 310, then everything will be positive gamma. But notice how the gamma is still negative on the target. So why is that? Well, because, you know, of course the unit I buy has an impact, but the unit that really creates a problem in this 260 to 310 combination is actually the one we sell. Why? And this, by the way, is the answer to the question. Okay, I see your answers there, Christian, Joe. But what you're about to hear now is the answer to the question. Okay, so think about it. 310, okay, it's my target, right? So if I sell the 310 call, let me type this right. If I sell the 310 call and I buy, you know, the 260, okay? And the stock does what I'm expecting it to do, which is, comes back down, reacts to the UFO, starts pushing, and gets here. So yeah, the 260 call is profiting beautifully, but what's happening to the 310 call? It's losing money. Of course, it's losing money because you sold it, but the problem is not that it's losing money. The problem is that it just became in the money, right? It just became in the money. So now you have a massive amount of gamma against you, okay? Because it's too close to the price of the target. It's too close to the price of the target. So having the stock move towards it, it's creating an accelerated pain because it's too close to the target. And that, my friends, okay, I'm coming back to the vertical in a minute. That, my friends, is why I said I would not want to do the 310 call. Because if I buy the 310 call, okay, and in this case I buy, in the prior case I sell, okay, so here with the spread, you sell it, okay, above, you buy it, right? But it's the same story. It's gonna be out of the money or slightly in the money when you get to the target. So you are traveling all that amazing distance, all the way from 276, all the way until you get to 310. It's a huge amount of distance to travel, right? And this is the point where that option is now barely becoming in the money. So in other words, you're gonna be eaten up alive during the life of the trade on time decay and any other impact of, let's say, volatility drops as the stock goes higher, which is, by the way, is a normal thing. So long story short, you may get to the target and you get, half of the profitability you expected to have. Okay, why? Because that option is really, really far from being in the money. So that's why in this case, so if I was to go for 300, so at least when I get to my target, that option is going to be $10 in the money. No one can steal away from me $10 in the money. No one. Okay, so I got guaranteed $1,000 profit there. Okay, no one can steal away those $10 from me because it's intrinsic value. Okay, so of course I'm making the trade more expensive, but I get more quality, right? So if I do that, that would be a better trade. But because the trade is more expensive, I also get more delta. So it's not ideal, but it's the best I can do. And notice that my gamma is positive all the time. So that choice is valid. Okay, that choice is valid. So option number one, buy the 300 call. Option number two, again, we know that is valid from a delta point of view, but is not valid from a negative point of view of gamma. And we know now that the 310 is the one creating the negative gamma, so I want to push it away. So what if I do 330? But if I do 330, my gamma is still negative, but my delta is too much. So I can now go ahead and move the 260 up to, let's say, 270, even 280. Okay. Now my delta is a bit less than 30, gamma is still negative, so what if I move up to 350? If I move up to 350, so now this is 36, and this is 4, negative still, tiny bit, but still negative, so what if I move up to 290? Here we go. So that I will take, okay? We got a delta which is very close to 30, gamma is not helping, but is not hurting, okay? So that could make sense for this trade to be executed. Okay, so that would be option number two. What about option number three? It's going to be the diagonal. Okay, and as I plan the diagonal, then we will look at which one makes the most sense, and we'll put the order in. Okay, and I guess I need to rush a bit here. So I'm going to start with the same setup. Okay, 350 and 290. We're going to be looking at buying the August. So let me reverse that. So we're going to be buying the 290 and selling the 350. Here we go. So using August expiration, this is what we buy. And we're going to be selling, ideally, the front week, okay, 25 of June. Now, how much we get paid for the 25 of June? Let's take a look. So 25 of June, 350 call, probably is gonna pay not so much. Yeah, notice, it's already 20 cents here with 335. So yeah, it doesn't seem that that's such a short expiration date is gonna work well. So what if I go to 16th of July, okay? Because also we saw lack of liquidity in some of those. So July is gonna pay 86 cents. Okay, so 16th of July, this is gonna be my choice. So 20th of August and 16th of July. And if I was to do this, this is producing 42 delta, okay, which is too much, which allows me to rise the 300 call higher. Now I get 35 delta, okay, 35 delta, which is better, but still my gamma is 12, it's a bit too much. I cannot rise this to 310, because if I buy the 310, I'm doing the mistake I mentioned before. So 300 is my maximum when it comes to rising the strike. So if I want to improve my gamma, I need to go to 360, but that will increase my delta too. So now my gamma is positive, but now my delta is 37. Okay? So now this is the best it can be, right? So what's best? So let's observe. What is best? To do, let me get rid of that slice so we don't get confused. Okay, so remember 276 is my entry. Okay, so what is better? To get into a trade that would cost you $1,400. So the most you can lose is $1,400. Okay, with 39 delta and a very positive gamma, but you lose $17 on time decay, or do a trade that is going to cost you 1,300 instead of 1,400. Okay, so you are saving $100 of risk. Okay, but now apart from saving $1,000 of risk, you are losing $6 on time decay instead of losing $17 on time decay. Okay, or doing a trade which is the diagonal, where it's going to cost you 1,400, which is like the first one. Okay, your delta is about the same, your theta, your negative theta is about the same, and you got less gamma. Okay, so well, the diagonal seems to be a clear no, right? Because basically you are suffering the same amount of theta you would suffer if you buy the long call. Okay, 17 instead of 14 is about the same, and you get 37 delta instead of 39. So to me, it doesn't make sense. You are complicating the trade, using more units, getting more slippage, paying more commissions, and it's not really helping the diagonal in this case, so forget about it. So now we are left with the single or the vertical. Okay, so what's better and what's worth? Okay, well, to be honest, there are trades that are very much equal. 39 delta versus 28. Okay, there is a difference, but not so much. Okay, but then you got no gamma at all on the vertical, where you got plenty of positive gamma with a call. Okay, so I would personally prefer to go with a call. Also, there is another reason for that. Liquidity is not amazing, as you can see. So if you go into the call, you're gonna suffer 70 cents of slippage, where if you do the spread, is about $3, because it's 2 units, where one is far out of the money and have a lot of slippage. So in a case like this, for me, it's very clear. I would just go for the simple one. Even though the stock is not making all-time high, the S&P may make all-time highs, but not the stock. Just buying a single call would be the way to go. In the end, so much analysis to conclude the simplest is the best. It's not always like that, of course, but today it is. And therefore, we're going to place an order here to conclude the session with CVNA using August 20 expiration. And I'll place the order, and then I'm going to make a comment. It's going to be the 300 call, which we're going to buy. Okay, we're going to buy that 300 call. And I'm just going to keep it simple with, market order, day only. And we're going to buy that 300 call only if the price of the stock, it's less than or equal to, and that was 276.21. So I'll pause here for a second so you have time to take a screenshot. I'll take a sip and I'll make one final note before we conclude the session, guys. So the final note is, while the trade looks very simple because it's just buy a call and that's it, the reality is that, remember, if we do get the initial push on the S&P, we're gonna get a push on the stock, and then immediately we're gonna do something about it, like we did with Lily, to then remove the risk of the trade, and then we'll build a spread, but after we get the initial move. So it's not like you're gonna be losing time decay all the way to August 20, right? So again, it seems simple, and it is simple, but at the end we are planning on trade management like we always do. Okay, so I'm just placing the order here. It's a day order. If we don't get filled today, then the order will be automatically removed from the system, and you can go ahead and review the trade tomorrow again and see if the trade is available, or any other trade, because tomorrow or Monday we may be back into a blue climate. Probably not tomorrow because of my expectation of profit taking, but the day after, meaning Monday, we may be back to business to the upside, and then the S&P soon after in the week, it's starting making all-time high again. So keep watching for those opportunities, because you saw how well they can work at times, and it's certainly a wise thing to do to expose ourselves to those types of opportunities. Okay, so I'm going to make a note here for CVNA, and we will get to review this in our next session on the next Wednesday, my friends. And hopefully today everything went well. We've been quite busy recently, and I know I talk fast, but I guess I should talk even faster, I guess, because the normal thing would be to have multiple trades executed, and I didn't manage that, nor yesterday and today, because we had so many things to talk about, and that's what it is. So hopefully you guys are doing your practice as well during your time. Just keep in mind that as you have questions, you can send emails, and as you send emails, you'll get answers, and that will help you clarify. It's important that you practice by yourself, apart from attending the sessions and watching what I do, because you will have questions of things that happen to you, and maybe it's even things that I have explained, but it's not the same that you hear it after it happened to you versus you hear it and it never happened to you before. It's gonna stick with you if you encounter certain issues or problems or challenges, and then when you ask and I show you in the sessions, then you're gonna have those aha moments, and it's gonna stick with you. Okay, so do your practice. I'm counting on you guys to keep up that good work, and which I know you are doing. But I want to make sure that you are well motivated to continue pushing those boundaries and perfecting yourself and your skills and mastering the markets, guys. Okay, because it's this is like a sport, isn't it? The more you practice, the better you get at it. So that's what it is. Anyway, everybody, you take care. See you next week. Have a good trading day tomorrow. Have a good weekend afterwards, and see you next week. Take care, everyone. Bye-bye.